Hello, my name is Jamie Lindau and I'm the sales manager at Trachte Building Systems. Today we're going to make a very short video concerning financing a self-storage project. We're going to talk to a banker today to talk about two different avenues in which you can get financing for self-storage. You might have looked at some of my other videos talking about how to properly lay it out, how to maximize your profit on a project, but it all comes around to getting the money for the project. So let's get started. All right, everyone, now we're going to get down to the brass tacks of trying to figure out the money aspect of building your self-storage. With me here is Nick. Want to introduce yourself, Nick?
I'm Nick Collins. I'm Vice President Commercial Lending with First Bank Financial Center based in Oconomowoc, Wisconsin. We're one of the top SBA lenders nationwide and specialize in self-storage loans.
Okay, Nick. So a number of people come to us and want to build a self-storage facility. They have been talking to us about how to lay it out properly, how to make sure whether it can make money or not. And at some point, they have to come and get the money. And so there is different options you can have for money. Let's quickly go over the two main ways that people get their financing.
Yep.
Go ahead.
So for some of you'll be able to go to a local bank and do a standard in-house loan, which is typically 20 to 30% down, maybe a 20 to 25 year term amortization, certain restrictions on interest-only periods, and pretty strict LTV limits based on the appraisal. Another option you'll have, which my bank specializes in, is SBA loans, which is specialized for first-time builders, first-time owners, a little bit more leniency on smaller down payments, not as strict LTV requirements, and generally tailored to people looking to build for the first time.
Okay, just to help newbies.
Mm-hmm.
Okay, LTV is loan to value. So that basically you can be able to borrow more money than you normally could, be able to risk it. And the SBA means small business, so it's government backed. So therefore, the goal of the SBA was to allow John Smith, us normal people, to be able to borrow money to get into business for themselves, and which is a good thing, and it's really helped a lot of people get into self-storage who normally would never have the financial wherewithal to be in. What is a general rule of thumb that how much cash money they need to be able to build a project? What kind of numbers are they?
So I'm going to speak in terms of SBA requirements. We generally, at a minimum, if your total project is $5 million or less, which for a lot of first-time people, the first phase will be in that category, we can do it with as little as 10% down.
And what happens if it's only $600,000 to get in because my land is $50,000? So in the $600,000 the whole project, what would you need?
Well, at a minimum, you need $60,000 into the project, whether you own the land, paid for engineering costs, paid for some of the architectural work, some of the hard costs of the project. As long as you have 10% into the deal, that would be the minimum amount.
One of the problems that we see that a lot of people rush into going way farther ahead, like they worry about what software program they are buying instead of worrying about getting the land correctly zoned and approved. And so to help, I'm sure you see the same problems. When is a client ready to talk to you? What do they need to be able to talk to their banker well and give them good information to get good information back? What do they need to have done?
So the biggest thing is to either own the land or have the land under contract. For you people out there that are trying to buy the land, you need to bake in enough time in your offer and with your contingencies and your due diligence period in order to run the gamut with your local planning commission, get the proper approvals, whether that means knowing how big of a retention pond, what the setbacks are, what materials are going to be required, and really knowing what the requirements in order to get it approved are going to be. So if you don't own the land and you don't know where you're going to build, it's impossible for us to back into the loan amount.
Yeah, well, that could be a whole nother video I make about how much time to put the contract in for your land, because you at least need 90 to 180 day time frame to be able to get all this stuff together. Because one of the concerns I have heard before with SBA loan is a lot of paperwork and it takes a lot of time. What is a normal time? If a person brings to you their plan, it's all approved, and they're ready for the loan and they actually have their act together, and how long does it take before the loan is approved? Okay, now they haven't got an official appraisal yet,
Yep.
but how long would it normally take?
So if you submit a squeaky clean loan package, you have all your ducks in a row, you own the land, it's under
Chances of
contract.
that are zero, just to help you out. Go ahead.
You have a hard bid or a proposal from a general contractor, your unit mix and projections line up. I can typically get a yes or no within 7 to 10 days. And at that point, if you were okay with the terms, then we would order the appraisal, get the title insurance going, order the environmental report, and gather up all the third-party reports needed. With that, we would do all the application paperwork in tune with all the third-party reports. And it typically takes 45 to 60 days to close once approved.
Okay, because we'll have people who want to order a building from us because you have approved their loan, for example, but they don't actually have the money out yet. They
Yep.
just have an approval. So they might use some of their own money that they had in escrow to put a deposit on a building, or do any of the other deposits you might have to do for starting excavation or pulling all the rest of their building permits. But all that money would go towards their down payment, correct?
In theory, yes. Being risk adverse, I wouldn't start the project until we close the loan, but if you feel good about it and wanted to go ahead with some of the initial work, you could put money into it, and then that would count towards your down payment as well.
Yes. Well, you wouldn't want to begin unless you actually have the permit
Correct.
from the city. That's the biggest
Yep.
holdup. Or the permit from city, state, county, whatever, water drainage permit, whichever, need all your permits that you need to be able to know that you can move forward.
And for those of you that need to wait for the permits, usually a typical deal, the first draw may include the building permit in that. So you don't need to rush and pay for that before we would close.
Okay, Nick, here's my weird question for you. Can you name me the biggest problems you see with customers coming to you? Other than giving you absolutely unrealistic timeframes, what would be a list of issues or concerns or things that they should figure out before they just know?
One of the biggest hurdles and headaches that I have to deal with is certain people promising a project's going to come in at X amount of dollars per square foot, and then once it goes out to bid, it comes in very high compared to what we already had approved.
What have you seen examples? 20%, 40%?
One project that rings a bell came in $700,000 more than what we originally approved for, which throws off the appraisal, throws off the loan amount, and kind of requires us to start
on
over.
arrival.
Yep.
Okay. So they would have, okay, that'd kill it. Is that a huge, what percentage was that? 20, 30%?
It was about 30 to 35%.
Very drastic.
Which the feasibility study then didn't work either when the higher costs came in. So we had a feasibility study, an appraisal, the loan approved, and then once we actually got the hard numbers, it threw all the reports off.
What else have you seen as far as other issues that hurt closing the deal or moving it forward?
Some of you want to get investors involved, which is fine and it's allowed. But when it comes to the nitty gritty, if a couple of the investors back out, that also throws off your source of your equity injection. So just having the ownership, the operating agreement, and having everything lined up so we know who's involved, who's putting what money in, so that there's no hiccups at the 11th hour.
Let's say I want to be my own general contractor, don't hire a general contractor. What mistakes you see when somebody comes to you with that proposal?
If it's a smaller project, say a 2-building standard outdoor storage, we generally don't have a problem with you being your own contractor. It's when we get into the 10, 11, $12 million multi-level climate control buildings, people get in way over their heads. So we generally like to have you hire a general contractor, someone that's licensed and knows what they're doing, so that you don't have to worry about it.
Okay. How about, $1 million project? The whole thing is $1 million. Could I still do it on my own?
In theory, yeah, we'd probably be okay with it.
Yes, but now I would have to get all the bids in, correct?
Yep.
All of them. Because a lot of people, they get all the costs, but they forget a number of items that they need. Like the security cameras that are behind me, that's a ching, ching, ching. The gate, the whole toss of the gate, all the other aspects you have to make sure you have everything covered in your bid, not just your grading bid, which will be the one that will change the most, and building and concrete bid. There's a lot more to it. Is that what you've seen also?
Yeah, I mean, just the budget as a whole, I don't think a lot of people really sit down and grasp everything that goes into it. I mean, you got your land costs, your construction costs, but you also have marketing, website, backing
That's
in.
when you get open.
Yeah. Backing into your interest carry during the construction phase and for lease up. A lot of people don't realize that you need that money to make the loan payments while you're building and while you're getting the project to run on its own.
So back to the whole feasibility as far as the income. What I would recommend to our people is once you have your final site plan, you would use Trachte's advanced calculator to put in all the projected cost plus all the rent for each one of the size of the units, so you can have a good breakdown to bring to them to see how long it's going to take, because in there will be an equation of how much working capital you'll need. And I'm telling you, you have to wait, because in the market today, you are not going to rent up in a 5-month period. They normally rent up 2,000 square feet to 3,000 square feet a month, and that could be as low as 1,000 square feet a month. And so that all changes as working capital. So it's good to present all this to you to make sure you get their money and make sure you have enough money. Because I'm going to ask you a tough question, how many people have come back and they needed more money because the project went over budget?
I'd say about half the deals you get to come back and increase the loan, and I just hope that it's compliant and that we're able to do it. So it's easier to get all your ducks in a row up front rather than coming back and wanting changes.
Yes, because things could change.
Another thing is in Texas, for example, this year we've had a lot of rain, so there's a lot of unforeseen obstacles with weather and when we close. So you never know when you're going to close, when you're going to get your building delivered, and then when you're going to get started on the project. So weather and timing with contractors is also an unforeseen hurdle.
A lot of people have asked me how they get the money or what counts as money. So what are the benefits of the SBA program to be able to, what counts as your collateral?
So for the SBA, if you're building a new site, we take the as complete value times 80%, and that gives us our lendable value. If there's a shortfall based on the loan amount, we're required to exhaust all efforts and trying to obtain other collateral. So for those of you that might have equity in another property, equity in your home, vacant land, sometimes those other assets need to be pledged in order to bridge that shortfall. If you don't have any other assets and the property still projects to have positive cash flow, we can still do the deal. So one of the biggest benefits is you can have collateral shortfalls.
And it will still work.
Yep.
And if I already have an SBA project and I want it for 4 or 5 years, what benefits do I also get for that?
So if you have 2 years of tax returns and 2 years of track record and want to build or buy another facility, you can do it with 0% down, and it's viewed as an expansion. So as you grow and build more phases and grow your business, you have to put less money into it.
Okay, because that's a big concern with everybody. How much can they borrow and how much can they build to be able to build? Okay, Nick, is there any checklist that we can give somebody as a assistance to get everything ducks in a row before they come to you? Do you have anything for them to use?
Yeah, so for our typical underwriting standards, there's some requirements for anyone that's 20% owner. We'd like to get the last couple years tax returns, a personal financial statement, a resume, and then as far as the project, we'd like to see a site layout, a proposal from a general contractor, and monthly projections that lay out how much you think you're going to bring in revenue, what the operating expenses are, and that's ultimately going to help you back into how many months you're going to get for interest only for the project.
Do you prefer that they have a management company or do you have any problem with them self-managing their site?
We prefer to have the owner be hands-on. There are strict rules with third-party management companies. Generally, all of the REITs don't comply with SBA, so you'd have to find a boutique firm or run it yourself if you wanted a third-party management involved.
Well, thank you, Nick, for talking about this, and I hope this has helped you get a little idea of what it takes to get the money. And you know, on a note, Nick, how have the facilities been doing that you've lent money to?
We've been specializing in self-storage the last 10 years, and knock on wood, we have never had one go bad yet. So it's a very good industry.
It's a good industry if you do everything right and get the right side. And we hope this has helped you, and we will have other videos you can look at about self-storage. And I want to thank you for watching this video.